Markets looked pretty bad today. What's going on, guys? It's Ricky with TechBit Solutions, and many of you guys know that this pullback is something that I've been waiting for, right? With Tesla's pullback from highs of 362, I didn't know how high Tesla was going to go. A lot of people were thinking, oh, $400 per share. I even thought $400 per share was a possibility. There's a lot of hype with Tesla, but one thing was certain is that when that hype did fade, which it shows that it's fading, and the market and the world comes back to reality, all of these stocks that are overhyped up and overvalued within a short period of time due to this, president-elect rally, is going to correct itself. And trust me, right? I'm a big fan of Elon. I'm a big fan of what's to come, but it's not personal. It's not emotional. It's a fact. Anytime something skyrockets because of a short-lived positive catalyst, it always tends to correct itself. If you think otherwise, then again, I wish you nothing but the best. But the sell-off that we've seen from 362 to the current price level, it's been about a 15% sell-off. Now, if we hold above 300, I know all of the bulls are kind of asking the same question. Can things get worse? Can it sell off even more? I hope you know that it can. Because if we break below, not this EMA, but that psychological support at $300, if we break below that $300 support, even from the price level we're at right now, I think we could head down to the old resistance, which is possibly a new support, right around 260 to 275. That's another 15% of downside. So can things get worse? 100%. We'll see tomorrow, because as of right now, NASDAQ futures don't necessarily look the best. They're in the red. They're down about 0.5%, meaning that if the market were to open up right now, the market would be in the red. TQQQ would be down 1.5%, and the rest of big tech would most likely be overall in the red. NVIDIA was one of the few big tech companies that actually ended in the green today. But you could see kind of it just consolidating. It ended 0.34% in the green, then it lost an additional 0.3% during extended hours. Nonetheless, it's consolidating. It's trying to hold up there. If it breaks that support, then a nice little retracement down to the moving average in the short term is very likely. Now, again, this is all in the short term. Do I want Tesla to fail as a company? Do I think that Tesla is overvalued at $300, 5 or 10 years from now? No, that's not what I'm saying, right? I'm bullish on Tesla. I want it to continue to grow. But dude, be realistic. It grew 54% in 16 days. You really think it's going to hold there in the short term? There's a very different approach from trading and investing. I need to understand when hype is present and when, things are actually fundamentally getting factored in that is increasing the value of the company. We're not there yet. Tesla was selling off before this Trump rally happened. It was selling off after the robotaxi event. It was selling off after it announced earnings and its guidance for 2025. Things are not looking good for the EV industry. I'm not even sure if some of you guys saw just a few days ago, they announced that they might be getting rid of the $7,500 tax credit from the federal government as soon as Trump gets into office. That would, in my opinion, really devastate the EV market. Rivian is a struggling company. It's failing. Nikola, failing. NIO, failing. Lucid, failing. Now we have Tesla. Now Tesla is one of the few companies that is actually making money. But a big part of this is the subsidies that it gets from the government and also the incentive that it gives the buyer, the consumer, right? People like you and I, when we purchase one of those vehicles, a big incentive is those federal tax credits. And if they are gone, that's less of an incentive to want to purchase one of these vehicles that drop and lose 50% of their value within just a few months because of Elon and all these price drops and accommodations that he does for new customers. I think that just shows how desperate Tesla is getting to push more vehicles out the door. Don't get me wrong. I love my Tesla. I love Tesla itself, but they drop like a rock when it comes down to value. Any real Tesla owner that owns their vehicle, that bought it new, knows exactly what I'm talking about. Even if you bought it in the resale market 1 or 2 years after it was used, you probably have lost a significant amount because of how quickly they've been depreciating. And this is a tough market to be in. So if you are asking the question, can Tesla sell off? Yes, it is extremely possible that just as quick as it ran up, we can correct ourselves all the way back to previous resistance, which again was the last resistance zone, right around 275 to 265. So again, old support levels tend to become new resistance levels. So if we get that break below 300, get ready for some sell-in pressure. Does it have to happen? No, of course not. But again, the market is very overextended. If you look at the rest of the market, it looks very similar to Tesla. Just as quick as it rallied, it's beginning to correct itself. Like I said a few days ago when everyone thought I was joking, and again, I tend to be too early to these reversals, but that's what I like to trade. I like to trade these reversals. While everyone jumps into the hype, when they get FOMO and they buy at overbought levels, just like everyone is doing with Bitcoin, just like everyone is doing or was doing with Tesla at $330, $360 per share. What is one thing I shared within my videos and one thing I shared with my LPP team? Stay patient. Our time will come because it always eventually presents itself when it begins to correct. Just like yesterday, just like today and the day before that, we've been making money as the market sells off. So then when it does correct itself and then it finds its support, then I can choose to go long. And I get it for a better deal and I don't have to bag hold from the highs of, in this case, $500 per share, or for Tesla people that purchase at $350 and $360 per share. Know when the deals are present and know when the hype is present. And I think this is a perfect example. So I'm really excited to follow up. Just wanted to come in here. Yes, NASDAQ markets are in the red. Yes, things are looking a little bit bearish, but we can't be surprised. Market was incredibly bullish nonstop for about a week due to this whole Trump rally, right? Maybe even more than a week. It was about 2 trading weeks. Now, finally, markets are beginning to cool off and correct themselves. And this always happens. So let it sell off. Again, if you're a big investor, this is a potential opportunity that when they do sell off and correct themselves, you can invest at a much better deal, right? You don't have to buy it at $330, $350 per share. You can buy it at a much better deal once the hype ends up fading. So again, I think this is just an important lesson for people that are just getting into the market. It's not an aha, look, I told you so. It's more of a, again, look back at history. Patterns tend to repeat themselves. They don't always have to, but it's super important for you as a trader to understand when hype is present and when, again, the fear of missing out is sinking in, and when you can tell yourself, yeah, it's better off for me just to wait for an actual deal and not just jump into the hype. So I hope to see you for tomorrow's live trading session. If you want to tune on in, second link in the description down below. You can join right now for $1 a day. Like always, let's make sure that we end the year on a green note. Take care, team.